Hi everyone at Stocktwits. This is Bagger Don at Stock Market Caddy. This is our idea number 2 for Stocktwits. Hopefully the first 1 or 2 ideas of many to come. We have been trading in the markets for years and years, and this is our entree to Stocktwits. But one of the things that why it is and how we came to even found Stock Market Caddy is that so many people would say, well, just follow a system, follow a system, or let your winners run, let your cut your losses short, and all of this. And it was always like, well, how do you do that? Easier said than done, right? Well, this is a particular strategy that we have written. It's called the Stock Market Caddy Breakout and Breakdown for what we call a 3-line break chart. And we have this strategy, and it is not souped up. What do I mean by souped up? It doesn't have a lot of profit targets and trailers and so forth. You could do that, and there's no question. If you were scalping, you could improve the results. No question about that. It's a 5-minute. Bear with me. That particular chart was a 1 minute. You can run it on a 1 minute basis. We prefer with the futures, at 5 minutes. We don't run it much more than that. Don't really need to. We don't need to suffer that kind of a drawdown. The larger the time frame you go, of course, the larger the drawdown, the larger the payout, the larger the risk. So we try to control and mute all of that. So we have a continuous contract with this same strategy, and it is proprietary. We could give you more detail if you're a private member. Now, I should say this is if you're a private member, we provide all of our proprietary strategies and indicators all at no cost. But let me show you from a learning standpoint what goes into a strategy and what we look at. This is the back test of the performance report. And if one had run this strategy over the last 2 months, the total net profit would have been approximately $13,025. A profit factor of 2.19. 2.0 on the long side, 2.31. Absolutely beautiful. What is a profit factor? A profit factor for us is more important than a win-loss ratio. A profit factor, let me show you. A profit factor displays the amount made in relation to the amount lost. The value is calculated by dividing the gross profit by the gross loss. By definition, a value greater than 1 means the trades have a positive net profit, meaning for every dollar you make, you're making $2.19. So as long as you have a positive profit factor, you're going to become, in essence, an ATM. But it's having a discipline. Going back to that, having a discipline, having a system. Even Jesse Livermore from the book Reminiscence of a Stock Operator, he talked in the book about how some of his worst periods in his life when he just couldn't follow his own discipline, his own system. Of course, Jesse didn't have computers and programs and all the technology that we have today, so it's a hell of a lot easier. But garbage in, garbage out. So we back test, we forward test, and then we run them. This is what the performance report looks like. Isn't that beautiful? Now, let's just show you this. What would this have done last week if you were running one contract? We go to the periodical return. 24 trades, 45% winning, 1965, trading the mini. Now, if you had traded the micro, would have been $200. Not all bad, not all bad, right? Those micros are pretty small. The other thing about this particular strategy is it's robust. What do we mean by robust? That is, I don't have to optimize anything, and I'm going to change this symbol. I should have done it from here. I'm going to change the symbol to the ES contract at ES. Now, you can make adjustments to these strategies, fine-tune them, but we're not. We're going to just see if you had run this very same strategy, a 5-minute line break, running our proprietary strategy, and let's just take a look. Well, and because we were set here, we can see last week, for the week, 32 trades, 50% winners, $3,337.50. Isn't that a beautiful thing? Profit factor, 2.25. How about we change it from here? Let's try the crazy market. We're using the continuous contract. This will work with ETFs. Of course, you need to use more money. But here is the NQ. NQ 1.87, 22,955. 252 trades, 45% winning. Last week, what would it have done? Last week, with the volatility we had last week, $6,380. How about, well, we did the Russell, we did the ES, we did the NQ. Folks, I'm back at Don at StockMarketCaddy.com. We are a mentoring site, and we invite you to follow us for free. Follow us on Twitter. Follow us on YouTube. Follow us on Stocktwits. We're going to be posting this and much, much more. And, I guess our lesson today is talking about a profit factor. If you haven't heard about a profit factor before, well, you may not be listening to the right people. It's critically important. More important than win-loss ratios. And so feel free to follow. And again, we're a mentoring site. I'm not a broker, not a professional advisor. And with that, we're going to complete this little 5 or 6 minute idea number 2. We're going to try to post 1 or 2 ideas a day here at Stocktwits. And again, you're free to follow. There's no cost to follow us, and on whatever works, site for you. And if you want to call us and get a better idea about what we do and what we're about, we're always available. And I'll leave you my phone number. It's 813-758-8263. 813-758-8263. You're welcome to call anytime. Weekends, Sundays, Fridays, Wednesdays. It doesn't matter. I work just about all the time because I love what we do. We're very passionate, and so if I'm available, I'm going to pick up and chat with you, and if I'm not, I'm going to get right back to you. So I wish everyone the best at Stocktwits. Have a great weekend, everyone.